This is video 4 of Matilda Limited, combining debentures of IFRS 9 with IAS 8. We're having a look at the note for the year ended 30 September 2015 and specifically the prior period error note. So like any other prior period error note, the first thing we need to do is to tell our users in a little narrative paragraph what happened, what was wrong, how did we fix it, and could we go back retrospectively. If we couldn't go back right to the beginning of this specific item that has a mistake in, we need to say that. In this example, what happened was the transaction costs were taken as an expense, not to the debenture, which means the finance cost in all subsequent years was also wrong. But we already figured that out in the 30 September 2015 year, which is the current year, which is the year we're busy with. So we could fix that year while we are busy with that. The debenture had only been there one prior year, which is the 2014 year. We could go back right to the beginning and fix it. We knew exactly what was wrong and we could go back. The fact that we could open the accounting system is not the issue here. The fact that we could open the accounting system is a practical issue. Where do I post the journals, the correcting journals? That doesn't affect your note. The financial statements need to be correct. Even if your accounting system can't fix it, then you fix it by hand and you tell your users what did you change. If we look at the note, there's also a column, and in this case, the only column that they give us is for 2014. They do not give us an opening balance at the beginning of 2014. Now, that column could have been there if this debenture was issued in 2013 or 2012 or 2011. At a period before the comparative year, then we would have a column, opening balance of the comparative period. That was not the case in this question. That is the only reason why there is no opening balance column. There could have been if the debenture had been issued 2, 3, 4 years ago. What we also don't see is a current year column, a 2015 column. Now, this will always be the case in a prior period error note. You do not show the current period. You're still busy with that period. If you see there's a mistake, fix it, move along. If you, in a test or in the exam, put the 2015 column there, you will be negative marked. It does not belong in a prior period error note. Where, in which IAS 8 note could you possibly see that? In a change in accounting policy note. There you have to tell your users what is the effect of changing the accounting policy on your current year. But this is not a change in accounting policy. This is an error note. You do not show the current year. We now need to tell our users which line items have been affected by going retrospective and fixing the prior period error. So it's really important that we tell our users whether something was decreased or increased. Okay, so every single line item, please, it's a line item. We cannot say decrease in transaction costs. Yes, it was transaction cost that should not have gone through profit or loss. But the line item where those transaction costs would have been included when we did the 2014 financial statements would have been the line item other expenses. So which line item is changed? It is other expenses. Is that line item increased or decreased? It is decreased. What is the effect of decreasing an expense on the profit for the year? The profit is increased. The profit is more because your expenses are less. That is why there is no bracket around the 2,500. The effect on profit is good. It makes your profit more if you have less expenses. The next line item that gets affected is the line item finance cost. That is an actual line item. Is it increased or decreased? How do I know? I have a look at the difference between what was done and what should have been done. In this case, it was an increase in finance cost. If an expense like finance cost increases, what does it do to the profit? The profit decreases. That is why there is a bracket around the amount. So remember, we are looking at line items. So we have looked at the line item, other expenses, the line item, finance cost, but there are other line items. Profit for the year, total comprehensive income, the net effect of both the expenses that have changed. Then we look at your SFP section, your balance sheet section, the items that are in your SFP. So first was the profit or loss section, statement of profit and loss, the SPLOCkie. Now we go to the SFP. What items in the SFP change? Well, your non-current financial liabilities. Remember, we said the entire debenture liability is non-current. What happened to it? The balance had to decrease. What else changed? Retained earnings. Why? Because if profit for the year is affected, then retained earnings will be affected. And because retained earnings is affected, total equity is also affected. So that is your disclosure in the prior period error note. You could have had an opening balance if the debenture was issued before 2014 already, longer ago. You will never have the current year column 2015. We got the amounts for the note from our calculation where we compared what was done with what should have been done. You also could have written correcting journal entries as part of your calculations, and those journals would have given you these amounts. The question only asked for the note. The question didn't ask for the correcting journal entries. Had the question asked for the correcting journal entries, then it's important to see when could I open the accounting system, because that will influence the way that the correcting journal entries look. Not the fact that you have to do them, not the fact that you have to fix the error. That will always be so, regardless of what your accounting system allows or not. But what you actually post in your system depends on when you can open it or not. In this case, compare what was done to what should have been done, see the difference, and prepare the note.